It's tax planning time again, and I'm here to help you make the most of the 2025 end of financial year. As always, remember this is general advice. Please contact us if anything sounds like it might apply to your situation so that we can confirm it's right for you. In this video, I'll take you through deductions, changes with the rules, and strategic tips to help you save tax, stay compliant, and plan with confidence. The Stage 3 personal tax cuts came into effect last year on the 1st of July 2024, and unfortunately we won't see further tax cuts until next year on the 1st of July 2026. Now let's take a look at the big-ticket items from the federal budget. One of the most practical budget measures for small business is the extended instant asset write-off announced in the budget. The instant write-off had been reduced for most small businesses to $1,000, but the budget announcement now has it remaining at $20,000 for the 2024-25 financial year. Both political parties are promising a further extension to the instant asset write-off for the new financial year, but if you want to obtain the tax saving now, you should secure the deduction this financial year. Keep in mind, if you want the deduction in this financial year, the asset must be paid for, installed, and ready for use by 30th of June 2025. This applies to businesses with aggregated turnover under $10 million. It also includes used assets and business-related improvements to assets. However, things like capital works like buildings, non-business assets, and the private use portion of assets are excluded. If your business spends more than $20,000 on an asset, you'll fall under the general depreciation rules. If you're using the simplified depreciation pool, remember the rates: 15% depreciation claim in the first year and 30% from the second year onward. Another important development to prepare for is Payday Super. It begins on the 1st of July 2026, but businesses should start getting ready now. This change will require you to pay your employees super at the same time as their wages, not quarterly. This will have a significant impact on your cash flow, so start preparing now. Very soon we will release some more information about Payday Super using the simple zero super stream system. Next, let's talk electric vehicles. If you provide an electric vehicle to an employee, including an owner employee, and it's under the luxury car tax threshold, which is $91,387 this year, it may be exempt from fringe benefits tax. That means a 100% deduction for all of the costs, including depreciation, running costs, and best of all, no FBT bill. But note that you do need to calculate, or ask your accountant to calculate, the value of the fringe benefit, and that amount must be included in the employee's wage summary for the year as a reportable fringe benefit. The government also announced continued funding for ATO compliance activity, and their focus areas this year include short-term rental properties like Airbnb, especially where the property is used for both private and income-producing purposes. The ATO has introduced some tough apportionment rules that disadvantage taxpayers who privately use their Airbnb properties during peak seasons. Properties located in coastal areas are attracting the most attention from the ATO. The shadow economy, this includes cash-only businesses where the ATO is looking for unreported income. Tax avoidance schemes, these are complicated setups that can land you in serious trouble, so if something sounds too good to be true, it probably is. Speak to us before you jump in. Retail and construction industries, here the ATO is looking for taxpayers who have omitted sales income. Now let's move to some key tax planning strategies. These tried and tested strategies are great for most small businesses. Business travel. If your trip is under 6 days and business-related, you don't need a travel diary, but it must pass the smell test. If you're claiming flights and hotels, make sure there's a clear business reason. Prepaid expenses. Rent, insurance, and subscriptions can be prepaid up to 12 months in advance. Prepaying now brings the deduction into this financial year. Bad debts. Write them off before 30th of June. You'll need to show you've made reasonable attempts to recover the debt. Ask us how to correctly process a bad debt write-off. Obsolete stock. Write it off before 30th June, and note that you'll need to show that the stock has no resale value. Bonuses and staff gifts. To claim a deduction this year, bonuses need to be paid before the 30th of June. Also, staff gifts under $300 that are infrequent and non-entertainment are tax deductible and qualify as FBT exempt. Gifts can be paid to owner employees, but the same benefit should also be provided to arm's-length employees. Wages to family members. If your spouse or children genuinely work in your business, pay them a fair market wage and keep proper records. Super contributions. Employer super must be received by the fund before 30th of June to be deductible. This means in practice that you need to pay it before the 25th of June. For personal contributions, the cap is $30,000, but if your balance is under $500,000, you might be able to use the carry-forward contributions from previous years. You can check your eligibility on MyGov or ask your accountant to look that up for you. Trust distributions. These must be documented and signed before the 30th of June. If you operate through a trust, don't leave this to the last minute. For A2B BAS Trust clients, we will prepare your trust distribution minutes and send them to you for digital signing in mid-June. And our tax-only trust clients, we will send you a pro forma distribution minute for your completion. Division 7A loans. Minimum repayments must be made before the 30th of June. If you've borrowed from your company, you must make this repayment before the 30th of June. Paying a dividend or bonus can help. For our A2B clients, we will calculate these repayments and suggest the most tax-effective way and least painful way to make these repayments. Logbooks and odometer readings. If you're using the logbook method for motor vehicle expenses, take your odometer reading on the 30th of June. Set a reminder in your phone now. Asset protection and structure review. This is a great time to check that your business structure is still right for your needs and offers adequate asset protection. We talk about this in our tax planning meetings with clients. Our clients should keep an eye out for your tax planning meeting invitation. And this is an important reminder about substantiation. Keep both your receipt or invoice and proof of payment. The ATO will want to see both in the event of an audit. The receipt alone is not enough. Also, don't forget Part 4A of the Income Tax Assessment Act. Don't enter into arrangements purely for tax benefits. There must always be a commercial reason behind your decisions. Setting your wage as the business owner at the right level is a vital tax planning strategy. One of the most common questions I get is, how do I pay myself? It's a critical decision, and it affects your tax, your personal budget, and your business cash flow. In the next video, I'll walk you through exactly how to set your wage as a business owner so you're paying yourself right. Don't miss it. That's your quick guide to tax planning for 2025. If you have questions or want help with any of these strategies, reach out to us today. We're here to help you finish the year strong and set yourself up for the new financial year. Don't forget to like and subscribe to stay up to date with more tips for Australian business owners.